Hi, welcome to this video day. It's the 11th of November, it's Sunday. I'm just going to give our updated outlook for the Euro against the USD, and we're going to the charts in a moment. Now, we've looked at the Euro in previous weeks. We've been very bearish of the Euro. It has come down, but volatility has been very low in this pair. However, we're approaching a key level of support. If that breaks, we will see, in our view, a long and sustained downtrend unfold. Also, the Euro is a sell on rallies. It's got limited upside in our view. Now, what we're going to do is go to the charts, and just when I'm doing my analysis, do keep in mind it is my view. As of right now, it can change in line with the market conditions. If you want all our trading techniques and our daily technical analysis of 14 major Forex pairs, you can simply click on the link beneath this video. Right, let's start with the weekly chart first.
Right, on the Euro USD weekly chart, just very quickly to see the big levels, the big picture. Then we're going to switch to the daily chart, draw entry level, stop and target, and also look at the sentiment behind the chart, why we think a big move is going to come to the downside. Now, in terms of the year, obviously we top out up here, we come down, then we try and get through the 118 level, and it's decisively rejected the rally there, and it's been down over the last few weeks, but very low volatility. Now, we said in our last video that our view was the 115 level should hold rallies. One body, two body, three bodies, four bodies, okay? Good resistance, a round number as well. We do get up there and immediately exhaust. Draw double trend line, so draw trajectory over those tails. That one just briefly pokes through. Finished near the low of the week, and we now think we should go to the downside. Now, from our perspective, the euro is sell on rallies, which I'll go through in a moment, or on a break of key support, which we see is here. Sorry, I haven't got it quite lined up the way I want. So yeah, just below that tail there. Obviously, we rallied up from support this time. I personally think we could break and move to the downside, where we're going to go to. I'll go through why I think we'll have such a big move in a moment by going through the sentiment. But 108 first target, and then towards these candles here, down towards the 104 level. Okay, so if it does break down, obviously it could be a big move if our view is correct, 900 pips or so. And now what I want to do is go to the daily chart, round up the sentiment, and just do some levels of entry, stop and target. Right, we're on the chart of Euro USD daily. We're just looking at how the price action is unfolding in a moment, because it's pretty interesting in our view. But first of all, I just want to look at the fundamentals and sentiment behind the chart, because these 5 points I've listed out here point to limited Euro rallies. I don't see a big sustained rally, but plenty of downside, as we saw from the weekly chart. Now, in terms of point number one, there's a view in the media, and I've seen it a lot of in the last week or so, is the US midterm elections are bearish the USD. Logic behind that is that Mr. Trump won't be able to do tax cuts and do what he wants with the economy. He'll be restricted by Congress now that the Democrats have got it. So the US won't be able to hike rates so aggressively going forward, and that means the US economy will slow up, and it's peaked. So the USD should go down. And I was a bit weary of the USD having a bit of a spike down on the midterms, but there was a little bit of a rally against it, nothing really dramatic, as you can see from the chart. I'll just show you the levels in a moment. And I think the reason for that is that the market wasn't anticipating tax cuts and more rate hikes down the line, other than the ones that most people expect, which are a couple in the next few months. And the US economy is not going to slow up that quickly. It takes time for an economy to slow when it's pretty buoyant, which the US economy is at the moment. Now, in terms of point number two, interest rate differentials favour the US. Okay, it's got an advantage already. That differential to widen. ECB on hold until at least summer 2019. US will hike 2 or 3 times before then. The differential will widen. This is a big fundamental advantage for the USD. Okay. Now, in terms of the economies, GDP in Eurozone, 0.6% for the last quarter. Now look at the forecast, 1.8%. It's only 2/3 of the forecast. They got it dramatically wrong, okay? And yeah, forecasts on Eurozone data have been well off in recent months. The economy is slowing up really quickly, okay? And now if we contrast this to the US GDP for the same quarter as Eurozone's 0.6, look at that, 3.6. What you've got is the US economy ticking along quite nicely, and Eurozone economy is just nosediving, okay? Unemployment's high as well. You've got inflation low. I think the ECB are being optimistic about raising rates in the summer of next year. Catalyst, though, for a big euro breakdown could be political problems in Italy. We know they're there. Italy has put in a budget which the EU disapproves of due to increasing debt. Italy says, that's the budget. If the Italians have a confrontation with Brussels, they're already in confrontation with Brussels, then basically you could get a crisis because Italian debt will become more expensive. And that's really serious in a country that is so indebted as Italy, which is the 4th largest economy in Eurozone. Crisis, if it gets to that level, will make Greece look, the Greek crisis a few years ago look pretty small. Look at the turmoil that caused. I do think they will solve problems in Italy, but I think it'll get worse before it gets better. Then they'll probably have for some sort of compromise. But I think that could be the trigger to send the euro. In terms of the market sentiment, it's just too bullish of the euro long term in relation to how the economy is doing. And you can see it in bank reports, broker reports, the media generally pretty upbeat about Eurozone going forward. I just don't see that argument, okay? Now, let's go to the price action. Now, we obviously saw, we came off this 118 level, so we first got interested in the euro. Pokes to get above the level, didn't get above the level there, doesn't get above here. We wanted it to break the 20-day moving average. If we're bearish, we always want the average to break. It's the same as if we're bullish. Then we expect it to act as resistance. Comes down, poke towards the average there, doesn't reach it. That one just gets through it and fades back. Down, another poke, fades down. Poke there, a couple of blues, then look at that blue there, straight through, up to 115, the round number, complete rejection. Red tries the 20 and then falls back. So, we've seen it on the weekly chart. 115 is a round number, and that is good resistance. I think, rallies back to that level will, basically fade. If you look at, sorry if I just draw a trajectory. Sorry, I'm not quite lined up with that body. But the trajectory comes across those tails and that body and the 20 behind. First level resistance. And then if we get through there, we'd look for it to fade back to there, okay? So rally potential from here, maximum 160 pips. I just don't see it doing it. It might do, of course, but I think, rallies will fade back to this first level. And you've got 3 bodies there that cross the trajectory to make us double trend line resistance, and of course the 20s. That should be holding rallies, okay? Obviously we rally up 114, just sell it back through 114. Your stop needs to be, a little way back from 115. You can't be right on the number. I'd say 115.45, something like that. And then of course we could break down. And you've got a spike candle tail here right on a round number, which is that weekly support level that we saw. We nearly reached it there, didn't quite. The rally is fading, we're coming down. I just see the level giving way. And if that level is decisively taken out, and by decisively I mean you must go through yeah, a little bit lower than the round number, something like 112.70, and volatility picks up, then I think the euro will be going a long way down and will only have minor rallies to the upside to correct oversold. Now, I would say, in terms of the euro, it's been pretty boring in terms of, when I say boring, I mean by the amount of volatility we've had in it, okay? Hasn't been that much compared to some other majors, but very bearish longer term. I think we are finally going to see breakdown, higher volatility, which is what we want. And we're pretty bearish of the euro on many currencies, actually. And yeah, one of our favorites, we covered it yesterday in a video, is Euro JPY. That looks like it's set for a really big move to the downside as well. So both Euro USD, Euro JPY look really good. I also quite like the look of Euro GBP short and Euro CHF, which I've covered in a previous video, very similar to Euro JPY. So we shall see how this one progresses. Of course, you can follow our up-to-date view and our levels of entry, stop and target in the member centre if you wish. Thanks very much for watching me as usual. Take care. Have a good day.